President Trump has sent a strong warning to the BRICS nations, demanding they provide clear commitments to prevent the rise of any currency that could challenge the dominance of the US dollar. He reaffirmed his commitment to ensuring the dollar remains the leading global reserve currency, and cautioned that severe economic sanctions, including 100% tariffs, would be imposed on any country that tries to undermine its supremacy. In a direct message last year, President Trump declared that the BRICS countries would never replace the US dollar in global trade, adding that any nation attempting to do so would face tariffs and be shut off from the US market. Earlier this year, he reiterated this stance, taking to social media to voice his concerns. He stated that any BRICS nation seeking to weaken the dollar would face severe consequences, including full isolation from the American market. Despite these warnings, Brazil, holding the BRICS presidency, is pushing forward with reforms aimed at reducing the group's dependence on the US dollar. These reforms focus on improving cross-border payments in local currencies, which could gradually reduce the BRICS nations' reliance on the dollar. The aim is to streamline international payments using innovative technologies such as blockchain and enhanced payment systems, ultimately reducing transaction costs and barriers to global trade. Brazil's successful instant payment system, PIX, launched in 2020, has already disrupted traditional payment methods, including cash and credit card transactions. This domestic success is now being leveraged to build a more efficient international payment system. Additionally, Brazil's local currency payment system, SML, in collaboration with Argentina, Uruguay, and Paraguay, allows for direct trade settlements in Brazilian reals, bypassing the US dollar. While current SML settlements still take a few days to process, there is optimism that the integration of instant payment technologies will make these transactions faster, more secure, and cost-effective. Later this month, BRICS representatives will meet in South Africa on the sidelines of the G20 summit, where Brazil will present its plans for the upcoming BRICS summit in July. The group is continuing to expand, with new members such as Egypt, Ethiopia, Indonesia, Iran, Saudi Arabia, and the UAE joining the bloc. The push to enhance local currency payments is part of a broader strategy to foster greater financial autonomy and resilience among emerging economies. The dominance of the US dollar as the global reserve currency is rooted in the aftermath of World War II, when Allied nations convened in Bretton Woods in 1944 to establish a new international monetary system. The US dollar was chosen as the central currency, with other currencies pegged to it, and the dollar convertible to gold at a fixed rate. This arrangement provided a stable foundation for global trade and reinforced US political and economic leadership. For decades, the US dollar played a key role in global trade and finance, supported by the strength of the US economy. However, by the late 1960s, fiscal imbalances and inflation began to challenge the Bretton Woods system. In 1971, President Nixon suspended the dollar's convertibility into gold, marking the end of the Bretton Woods era and ushering in floating exchange rates. Despite these changes, the US dollar retained its dominant position, further solidified by the petrodollar system established in the 1970s, where oil-exporting countries agreed to price oil exclusively in US dollars. Over time, the deep financial markets, stable political environment, and international institutions supporting the US dollar have helped it maintain its global prominence. Trump's recent statements reflect the United States' recognition of the growing momentum behind de-dollarization efforts, signaling concern over potential challenges to the dollar's position and the possible destabilizing effects on the US economy. A shift away from the dollar by major economies could lead to reduced demand for US treasuries, higher borrowing costs, and diminished geopolitical influence, making it a critical issue for policymakers to monitor. In this video, we will explore the latest developments, focusing on President Trump's warning to the BRICS nations and their progress in reducing reliance on the US dollar. We'll also examine the broader implications of this shift in global trade and finance. Let's start by looking at the current status of dollarization. BRICS countries have been increasing the use of their own currencies in trade, aiming to reduce their dependence on the US dollar. This movement is motivated by both political and economic factors. China and Brazil agreement. In early 2023, China and Brazil, the two largest economies in the BRICS bloc, agreed to conduct trade in their own currencies. China's yuan, CNY, and Brazil's real, BRL. This move eliminates the need for the US dollar as an intermediary, making trade more efficient and reducing exchange rate fluctuations. In 2022, China-Brazil trade reached around $150 billion, and using local currencies is expected to lower conversion fees and increase financial independence for both countries. Iran and Russia. Integration. Iran and Russia have made significant strides in integrating their financial systems to enhance bilateral trade and bypass Western sanctions. In early 2023, both nations connected their national payment networks, allowing for the mutual acceptance of bank cards and reducing reliance on the global payment system, SWIFT. This integration allows for financial transactions, including letters of credit and guarantees, without depending on SWIFT, thus limiting the impact of Western sanctions. India and Russia's currency agreement. India and Russia have also adopted local currencies in their trade, particularly in the energy sector. After sanctions were imposed on Russia in 2022, both countries increased the use of the Indian rupee, INR, and Russian ruble, RUB, for transactions. By doing so, they avoid using dollar-based systems and protect themselves from external economic pressures. South Africa's currency efforts. South Africa, the BRICS member with the smallest economy, has also begun settling more transactions in local currencies. In 2023, South Africa signed agreements to pay for certain imports, like machinery and electronics, in Chinese yuan, reducing its reliance on the US dollar and increasing liquidity in African markets. Now let's take a quick pause. If you're enjoying the video, we'd greatly appreciate it if you could hit the like button to help us reach a wider audience. Feel free to share your thoughts or feedback in the comments section below. Thank you for watching. Let's dive back into the discussion. BRICS Pay is a decentralized payment platform established by the BRICS nations, Brazil, Russia, India, China, and South Africa. Its primary goal is to facilitate seamless cross-border transactions using local currencies. This initiative is designed to reduce reliance on Western-dominated financial networks like SWIFT, strengthening the economic sovereignty of member countries. Launched in 2018 by the BRICS Business Council, the BRICS Pay project leverages existing national payment infrastructures, including Russia's MIR network and India's Unified Payments Interface, UPI, to enable efficient international payments within BRICS countries. The system allows users to send and receive payments in their native currencies, simplifying currency conversions and lowering transaction costs. At its core, BRICS Pay is built on advanced blockchain technology, ensuring secure, transparent, and efficient financial transactions across BRICS nations. The system combines centralized domestic payment systems with a decentralized structure for international transactions. This hybrid design ensures regulatory compliance and technological flexibility. National systems like Russia's MIR, India's UPI, and China's UnionPay are seamlessly integrated for local transactions, while blockchain facilitates direct peer-to-peer exchanges internationally, eliminating intermediaries and enabling real-time efficient settlements. Blockchain's distributed ledger technology guarantees immutable transaction records and supports smart contracts for automating currency conversions and compliance procedures. BRICS Pay's high adaptability and scalability make it suitable for various technical and regulatory environments, allowing it to handle growing transaction volumes and onboard new participants without compromising efficiency. Interoperability is a key feature of BRICS Pay, enabling smooth interaction between different national payment frameworks and ensuring seamless cross-border transactions. The distributed network also optimizes liquidity flows, offering real-time settlements in local currencies. These characteristics improve the system's efficiency and make it a credible alternative to traditional financial platforms. By promoting the use of local currencies in international trade, BRICS Pay aims to challenge the US dollar's dominance in global transactions and foster a multipolar financial order. The platform provides BRICS nations with greater control over their financial affairs, reducing the impact of external economic pressures and sanctions. Through the integration of national payment systems, BRICS Pay aims to accelerate cross-border transactions, lower costs, and boost overall financial efficiency among member states. In October 2024, BRICS Pay was officially launched at the 16th BRICS Summit in Kazan, Russia. Demonstrations showcased its potential as a blockchain-based cross-border payment system, positioning it as a viable alternative to traditional financial networks. The BRICS nations share a unified objective of enhancing their financial stability and mitigating risks related to currency volatility and geopolitical uncertainties. As part of their strategy, BRICS nations have been actively accumulating gold reserves. By the second quarter of 2024, BRICS countries had amassed approximately 6,200 tons of gold, accounting for 21.4% of global reserves. Russia leads the charge with 2,040 tons, 8.1% of global holdings, followed by China with 2,060 tons, 7.8%. Notably, Brazil has nearly tripled its gold reserves since 2018, indicating a robust strategy to fortify its economic defenses. This gold accumulation reflects BRICS' broader goal of reducing dependence on the US dollar and enhancing financial sovereignty. The buildup of gold reserves serves several strategic purposes for BRICS nations. It allows them to diversify their monetary assets, shielding themselves from sanctions and bolstering their independence in monetary policymaking. Gold also acts as a hedge against external financial risks, ensuring that BRICS economies are better equipped to navigate global economic fluctuations and crises. The accumulation of gold, coupled with initiatives like BRICS Pay, signals a move toward a multi-currency global monetary order and emphasizes the desire for financial autonomy. This synchronized effort to accumulate gold and implement decentralized payment systems demonstrates BRICS' commitment to building a resilient financial ecosystem. These measures are designed to create a framework that can withstand market instability while reducing dependency on traditional financial channels like the US dollar and Western-controlled institutions. Through these initiatives, BRICS nations aim to establish a financial order centered on stability, independence, and equitable economic participation in the global arena. The shift toward dollarization. Dollarization, the global move away from reliance on the US dollar in trade and finance, is being driven by several key factors. The primary motivation is economic sovereignty and stability. The US dollar's dominance gives the United States significant influence over the global economy, and its monetary policies can cause volatility in other nations. By reducing dependence on the dollar, countries seek to regain policy autonomy and minimize their vulnerability to external economic shocks. Moreover, reliance on the dollar exposes nations to the risk of US sanctions, which can limit access to international financial systems. Countries like Russia and China are exploring alternatives to safeguard their economic independence and avoid such sanctions. Reserve diversification is another factor driving dollarization. Central banks are increasingly holding assets in currencies other than the US dollar, as well as in gold, to reduce risk and weaken the dollar's dominance. Political and strategic motivations also play a role. Countries like China and Russia are actively promoting their own currencies in international trade to counterbalance US influence and contribute to a multipolar financial system. Regional economic agreements, such as the China-Brazil Pact to use local currencies for trade, are further contributing to this trend, lowering conversion costs and reducing the dollar's role. As emerging markets strengthen their positions in global trade, they are naturally inclined to use their own currencies, reflecting their growing influence and bolstering their financial networks. Together, these factors underscore the multifaceted and deliberate objectives driving the move toward dollarization. Trump's warning to BRICS. In response to BRICS' initiatives, former President Donald Trump has issued a stern warning. Trump declared on his Truth Social account that any BRICS countries attempting to weaken the dollar will face severe penalties, including 100% tariffs and exclusion from the U.S. market. Throughout his campaign, Trump has been outspoken about making it financially unfeasible for countries to abandon the U.S. dollar. His recent comments escalate tensions regarding BRICS' efforts to reduce dollar dependence. Trump's rhetoric is in line with his previous economic policies, which have utilized tariffs to further U.S. interests. His inner circle is reportedly exploring strategies to penalize countries engaging in trade outside of the dollar, including designating them as currency manipulators and imposing additional tariffs. This stance reflects Trump's commitment to maintaining the U.S. dollar's supremacy in global trade. The conversation around dollarization has gained momentum following BRICS 2023 summit, where discussions centered on reducing reliance on the dollar. The rise of alternative currencies became particularly evident after U.S.-led sanctions against Russia, which sparked global dissatisfaction with the dollar's monopoly. Trump's campaign has emphasized the need to confront these trends, signaling a resolute stance against any economic coalitions that threaten the dollar's dominance. Trump's economic policies have already had a profound impact on international markets, as evidenced by his announcements of tariffs on key trading partners. As he prepares for his second term, Trump's approach to maintaining the dollar's supremacy will be a defining feature of his economic strategy. Conclusion. The BRICS nations' push for a new payment system and alternative currencies represents a challenge to the US dollar's status as the world's leading reserve currency. By developing alternative financial infrastructure and reducing dependence on dollar-based trade, BRICS is actively reshaping the global economic order. This strategic shift has raised concerns in the United States, which has long enjoyed the benefits of the dollar's dominance. Trump's administration has voiced concerns about BRICS's coordinated actions, warning of the potential risks to U.S. financial dominance. In response, Trump has intensified rhetoric targeting BRICS nations, underscoring the consequences of challenging the dollar's hegemony. However, for many countries, the promise of a more independent and equitable financial system outweighs these warnings. marking a critical point in the reconfiguration of global economic power. The BRICS initiative signals not only a challenge to the US dollar, but also a broader declaration of economic sovereignty and a call for a fairer distribution of global financial influence in the 21st century. Thank you for watching. We truly appreciate your time today. If this video resonated with you or sparked any thoughts, please show your support by liking and subscribing. Your engagement means the world to us. Don't forget to check out another video from our channel now playing on the screen.